The other kind of wild cards that we've got too are the deferred revenue. So this is something we've talked about offline quite a bit. So since Tesla shipped Smart Summon at the end of Q3, at least to a portion of their markets within the U.S., they should be able to recognize some of that deferred revenue. So on the last 10Q, they said there would be $567 million of deferred revenue recognized over the next 12 months. That was their expectation, at least. So I think it's a mystery right now how much of that would be allocated to Smart Summon as a feature, and then how much of that actually gets recognized from what they ended up rolling out in Q3. I think we're both expecting maybe like $50 to $100 million of that this quarter. Correct me if you have different numbers, but that's also kind of a wild card too. And that, obviously can impact margins too, because that should be high margin revenue. I'm not sure exactly how the costs are accounted for on that deferred revenue, but the nice thing on that too is as Tesla starts recognizing some of that revenue from these autopilot features, full self-driving features, that's just going to improve their margin going forward too. So not only are they going to get that benefit of recognizing it, it's going to allow them to recognize it as it accrues in future quarters versus having to defer it again, which then should drive some of those operating leverage things that we were talking about before. Anyway, that was kind of a tangent, but a lot of variability on the revenue line.
Yeah, no, I love this kind of going down this rabbit hole because it's very, it's a tiny accounting difference, but it's really an example of this whole transition in Tesla's model. As more and more of it goes to software, the cars get higher margin. And now we have this weird catch-22 of like, they're getting the cash up front, which is why the cash flow is great, but they can't recognize on their GAAP statement until they, really deliver those features. Then they're just moving around, money on their balance sheet and income statement, but the cash isn't actually changing. So this is going to be something we're gonna have to get more and more used to. I'll actually say, my guess is because it was mostly US and because it was Smart Summon, I don't think A, there was a huge amount of functionality, B, the geography wasn't there. So I think out of that 500 million potential, I'm a lot closer to maybe 25 to 50 million, maybe even a little less.
Yeah.
But that either way, it's pure margin and that should help. And I think at a high level, we're starting to see the margins of Tesla's business go up as they're literally charging people more for software. Like to me, this is the thesis of why is Tesla potentially the highest valued at so much higher on a car's sold basis, on a revenue basis, not just the growth. It's that the profitability per car and per dollar of revenue is going to be way higher. And we're seeing that now with this as they get closer and closer to autonomy. So I think at a high level for long-term investors, this is something we should really be paying attention. And it's funny because CNBC, like when I went on after the last quarter, they're saying how crappy Tesla's gross margin is, but they don't realize that the cash was great and they just couldn't book that gross margin. So it's funny to see how Wall Street is like pinpointing this as a negative when really it's an incredible positive transformation going on.
Yeah, 100%.